and again, this is not to apologize. I'm frustrated that gold hasn't reached new highs and silver hasn't broken through, but it will. And I'm very confident of that without selling my book.
Well, so why isn't gold responding to this? Why is gold down at 1700, 17 mid 1700s as we're talking right now, and silver is down at
Yeah.
what is it, in the 19 range right now?
Yeah.
Why are they not responding as people would have expected in this scenario?
The first thing I will say, and again, this is not to apologize. I'm frustrated that gold hasn't reached new highs and silver hasn't broken through, but it will. And I'm very confident of that without selling my book. But the first thing you have to keep in mind is, first of all, gold loves a recession. We're not officially in a recession, though. If you look at the Atlanta Now statistics, I think we already are. Doesn't matter with inflation where we are and the Main Street economy where it is. People know we feel like we're in a recession. But gold will shine in a recession. But in a pre-recession or early recessionary stage, when markets are tanking, like we're seeing the S&P 500 dipping below bear territory, the Russell 2000 down 30+%, the S&P, the Nasdaq 100, which is the all-star stocks of the Nasdaq, down below 30%. Of course, Bitcoin and cryptos aren't even worth discussing. They've taken such huge losses. Real estate markets are tanking. So every major asset class has been tanking. And yet gold, yes, it hasn't been ripping, but it hasn't nearly bled to the levels of the other major asset classes. And that's not uncommon. When there's a tanking market like we saw in October of 2008 and even in March of 2020, gold and silver can be very sympathetic with tanking securities markets. And then they rip north, they diverge, and they stop following. So I think keep in mind that, first of all, at least gold and silver, as painful as it is to watch and why they're not hitting new highs, they're not nearly in the same camp as Bitcoin or the S&P or the Nasdaq. Second point is, and this is probably the most important in terms of answering, in my opinion, the gold and silver price question, especially the silver price question, is the strength of the US dollar. And I say strength, that's a really loose word, strength. It's all relative strength. It's the best
It's going up mostly because the yen and the euro are tanking, not because the dollar is going up.
Right. It's the best horse in the glue factory, best patient in the ICU fiasco. But of course, in the yen is worth discussing too. But so with the dollar having relative strength, and believe me, as this crisis was unfolding post Ukraine, Powell was sitting down with Yellen. I can only imagine those two geniuses getting together with Larry Summers and Biden. All these, I mean, if you get into the biographies of Larry Summers, Biden, Powell, Yellen, that's like having kindergartners trying to do brain surgery. I tried to fix this. And yet their idea was, well, let's raise rates deliberately. Let's make the dollar relatively strong. Let's attract money into these markets and into this currency. And of course, markets tank. So that was an invitation to a disaster. But on a relative basis, when the dollar is stronger and rates are at least temporarily higher, and that is not a sustainable policy longer term, but right now with a relatively stronger yield on the 10-year and a relatively stronger dollar than anywhere else, that's a headwind for gold, in particular for silver, which is much more sensitive to that inverse correlation to dollar strength and silver pricing. So if the dollar is strong and yields are high, that's going to be a temporary and strong headwind for gold. The reason I have zero concern about that, and it's not arrogance, and it's not, I know it all about gold and silver and I believe in it, but it's just common sense math and history. The strong dollar and the rising rates is not a sustainable reality. That's mathematics and history. It has nothing to do with a gold or precious metal bias. When you have $30 trillion in debt and climbing public debt, the Fed knows it, the Treasury knows it, the Senate knows it. I think even Powell knows it. I think maybe even Biden knows it. Certainly Larry Summers knows it, maybe if he's awake. But the simple fact is, at 30 trillion plus in public debt, you can't use interest rate policy to fight inflation. It doesn't work anyway at these levels of debt, and you can't afford to pay that debt. We can't afford 5, 6, 7, 8% interest rates that would be needed to fight inflation.
So the next step that for gold and silver investors, I think a lot of us are just expecting at some point the Fed's going to.
I think first of all, there are no good options left. Pause, pivot, print, raise. There's absolutely no good options left for the Fed. And I think Powell knows that. I don't think the majority of politicians or virtue signaling senators and congressmen know this. But look, it's a lot like 2018 when Powell was trying to raise rates and even tighten the book. And every quarter he would raise rates 25 bips. Every month he tried to raise rates. And I said in 2018, there's going to be a bloodletting at the end of this year because you can't raise rates when you have a stock and bond market that's so dependent on cheap debt and low rates.
Right.
And sure enough, by the end of 2018, going into 2019, the markets panicked. The 10% moves daily into Christmas. New Year's Eve was a disaster. And then what did Powell do? He didn't just pause. He paused for about 10 minutes into 2019, and then he reversed course altogether and went unlimited QE. And so that's what I said. That, again, we're speculating, but it's not so much a speculation anymore that he will have to pivot. He will have to pause and then print. And so will Lagarde, and so will other major central banks like Japan's already doing, because they have no choice. They can't afford rising rates, and to keep rates down, they have to buy government bonds to keep their yields repressed and keep rates down, because they can't afford to pay their own bills if they let rates go too high.
Yeah.
And so I see what will happen is a market crisis from rising rates into a debt bubble. Markets are already puking, but they're going to puke more. And then that's going to create pressure to pause and then reverse course, pivot, and start printing money. What I think is really dangerous about this pivot coming is more and more people are going to not have, they don't think the Fed has credibility. That instant mouse click money doesn't have the same power. The markets will react for a while, but the truth is, if you save the markets or try to control rates by printing money, fantastic. But by doing that, all you're doing is printing more mouse click money. So you're creating more inflationary pressure. So it's either a market crash or hyperinflation. And the truth is, in my opinion, my strong opinion is that the central banks of the world in general, and the Fed in particular, are completely lying about fighting inflation. Not only are they not wanting to fight inflation, they want more inflation. And that's the historical trick used by every debt-soaked empire, regime, or nation since ancient Rome to Yugoslavia to Weimar Germany to 1870 France to today. When you have too much debt, you inflate it away by debasing your currency and taking pro-inflationary policies. So we will see the QE money printers back in full swing at some point. Right now, the only reason Powell is raising rates is not to fight inflation. It's so he'll have something, anything to cut when the market dips below 40%, 50%. Wow. It's a game. It's a game.
Oh, yeah. We've got to, so let me get this straight. They've got to raise rates to kill the economy so that they have room to lower rates to save the economy.
It's like it's like you raise that point with David Morgan. It's exactly that irony. That's how schizophrenic, desperate, cornered, and solutionless the system is. And Mohammed Al-Arian, a great bond trader, said the Fed has run out of good scenarios. There are no good scenarios. So they're going to choose between a market crash and inflation. Of course, they're going to choose inflation. They're going to signal that they're trying to combat inflation. Look, when you've got inflation reported at 8.6, but using the 1980 scale, we're at 20% inflation. You can feel it from the
at least 12 to 15, 12 to 15 easily.
Yeah.
A 2%, 1%, or 50 basis point rate hike is not going to kill that inflation. Powell knows that. So that's disingenuous. They're only raising rates so that they can have a little bit of room to lower rates when the markets are tanking, but it'll be far too little, far too late.